Hey, how's it going, everybody? Welcome back to the portfolio. One of my stocks, Celsius. Celsius did report earnings, and as you can see, it is crashing down 18.8% today. Let's actually look at the numbers real quick. So, Celsius reported Q2 revenue of $817.9 million, missing the estimate of $872.6 million. So, that was a significant miss, with adjusted EPS of 36 cents below the 43 cents consensus. The flagship Celsius brand sales dropped 11.7% due to higher trading spend, inventory rebalancing, and softer club channel demand. Gross margin also narrowed from 48.1 from 51.5, reflecting margin pressure. Despite record overall revenue and completion of the Rockstar integration, the profit miss and margin contraction drove the stock down nearly 19% today. So what are my thoughts on this? I think this is a short-term thing, right? They just integrated their other brands into this, so I think they're gonna have a little bit of time to rebrand and see what happens. I will give it some time. I believe 2027. If they don't turn around these numbers by 2027, then I'll start having some concerns. But I'm not. I understand why they're going through these things, right? You have to understand why. And also, when it comes to Celsius, this is not a trade that I'm doing just to buy one day and sell the next day. No, that's not the way that I play the stock market. I usually buy the stock Celsius for the 5-year outlook, 10-year outlook, right? And obviously, with all these moving parts for Celsius going on at the same time, it may be expected for them to have some trouble doing what they're doing, right? So, right, just because a stock has one bad earnings report doesn't mean you just sell the stock, right? Especially if you have a long-term outlook. An example that you can see is Meta, right? If you buy Meta and you see that the numbers that they had, obviously Meta had a bad earnings report as well. Even though the revenue growth was good, it wasn't to an expectation of what investors were looking for, and many people say their earnings were not great, right? You're not just gonna sell Meta, right? You have to see how they're gonna play out their business. So, for me, I am holding Celsius. This is, like I said, this is a 5-year out play for me. I expect Celsius to eventually be $100 stock, right? And I have to wait and see how the next couple quarters go. If this is a continuous trend, then I'll start to be a little more concerned. But just one bad earnings report is not going to overall make me want to sell a stock. I need to see a trend going on, right? And obviously, if next quarter we start seeing some worse numbers, then I will start to readjust my long-term thesis on Celsius and whether or not I want to hold it for the long term. But for right now, Celsius may be a good opportunity to buy. I probably will buy some shares if it continues to go down. My average cost is $29. I would like it if we can see Celsius go down significantly more, even great. But like I said, my long-term thesis isn't really going to change just because of one bad earnings report.